Good morning, guys. Welcome to the show. You ever heard of the Chinese Brick and Road and Belt and Road Initiative? I think it's it's Brick and Road or Belt and Road Initiative. Anyway, what they're planning on doing, China is they're planning on putting these basically highways all through the Middle East that's going to lead back to China, and they're going to China's plans is to become a consumer nation. Now, they're planning on changing their economy over to consumerism rather than, in other words, they're going to become the consumer is their plan. They're going to take their riches that they've earned from selling stuff, basically selling products to the world as an exporter, and now they're going to become the consumer. America was the consumer. America bought all these goods from China, huge consumer, the biggest consumer nation in the world, and made China rich. Now China's saying to themselves, we want a piece of this pie. But you know what? First off, to become a consumer, you have to have money to spend. China right now is so far in debt, it's unbelievable. But they're planning to say, well, let's take a look at it. Let's open up the charts right here. China's and Europe's freight planning map. This is their Belt and Road Initiative. They plan on and look, these are like arteries. These highways where they bring goods in to China are like arteries, you know. And if you're looking at a body, this could be the circulatory system or the arteries and veins and stuff. These roads, and China plans on putting all these new roads in through the Middle East and everything, and bringing them all into Europe, you know, and so that they can freight goods back and forth. It's a huge initiative that they have, and this is what they plan on doing. Now, Italy's been eyeing all this up, Rome, and there's even talk of an Italia leave, in other words, leave the European Union. And they're talking about riding this China train and selling all these products to China in this new Belt and Road Initiative that China has. And China would buy, it says, now this is the Minister of Italy, he states the obvious. The Brick and Road Initiative, or China's new Belt and Causeway plan, where they're going to put all these roads in and they're going to become a consumer nation, will allow more of made in Italia, made in Italy, to be exported to China. And it says, the appeal of made in Italy for the Chinese consumer, food, fashion, art, interior design, not to mention all those Ferraris and Lamborghinis. So see, it's like I say, though, for this all to work, you know, China's got to have the money to pay for it all. Of course, China's going into this new, this is what's boosted up the markets the last few days. China's going into all this new stimulus programs. There's talk of new stimulus coming out of China. So they're just going to print more. China's getting really, really deep in debt. If they were a man with credit cards, they're really putting the money on the credit cards big time. So now let's get into the markets today and take a look at what's going on. First thing we're going to take a look at is the Bitcoin price. And it's $38.67.25. We're going to take a closer look. Let's take a look here at the 15-minute chart. Let's get right in a little bit closer yet and take a look at the 5-minute chart and the 3-minute chart. And what we can see is she did have a little dip last night, but she's pulled out of it, and now she's back up to where she was. She's basically going sideways now, with a slight upturn in the price, you know. So we're looking at 38.70 on Bitstamp, and Bitfinex is 39.75. Just under $4,000 she's riding at right now. Now let's take a look at silver and gold. We're taking a look. Silver has made a pretty good substantial move upwards. It's at $15.42. Silver, you know, is actually doing better than gold the last day or two. In this last upsurge in price, silver price has actually moved more than gold. If we go over here and take a look at the gold price today, Sec, let me pull down so we can see the charts a little bit better. We can see gold's only up $4.50. And I'll tell you what we notice is gold still hasn't touched $1,300. It's at $1,297 right now. It's still under $1,300, but the silver price is basically where it was when gold was like at $1,325 a week or two ago. You know, gold was like $1,325 and silver was $1,542, roughly. I mean, I'm just roughing it out for you guys. But right now, silver's at $1,542 and gold is still under $1,300. So silver's caught up a little bit. It looks like silver is starting to that would affect the silver to gold ratio, you know. That would bring it down a little bit lower, the silver to gold ratio. But I always expect this. I expect ultimately in the end that ratio is going to go back to a more normal ratio, the gold to silver ratio. Right, it's going to go back down probably to 50 to 1 or 40 to 1 and more of a normal gold to silver ratio. And so that means that you're going to get more gold for your silver. You know what I mean? Ultimately. So my suggestion is to people out there, buy silver. Right? And later, in a couple more years from now, you can trade your silver for the gold. Don't buy the gold right now. So if you're a person out there right now who's questioning their mind, which should I buy? Which should I buy, gold or silver? Well, if you're going to buy a lot, you have to take it into consideration that gold's a lot easier to store away. If you've got a lot of money, if you got smathers of money, maybe gold is your best investment. You know. Because you might have to buy 2 tons of silver, and you can take and put your gold in a small little suitcase and carry it with you. So you got to take that into consideration. But if you're like the average Joe like us, you're probably better off with silver because later the silver to gold ratio is going to change, and you're going to get more bang for your buck basically with silver. So if you're a small time buyer, when the gold to silver ratio goes back to normal, you're going to get more bang for your buck out of silver. Anyway, let's move on and take a look at the cryptocurrency market capitalization. $134.3 billion. Bitcoin dominance 51.3%. You know, Bitcoin is really maintaining its dominance over the market, but we're seeing some major moves this morning in the coins upwards. Litecoin has made a nice move of 3.25%. Litecoin, I like to say, Litecoin is the right coin. It's the one I like, you know. Stellar's still on a charge. It's still up 1.31% today even. So this is what we got going on with the cryptocurrencies. They're doing good. They're doing really good, considering that they're in a bear market. Now let's take a look at the oil price today. $57.35. And we're seeing a little uptick in the price of oil. You know, it's still moving upwards. It's up 56 cents on the day, 1% on the day. Now, let's take a look at the pre-market, the Dow Jones. Now, yesterday we seen a rather large climb in the market, you know. This is caused in part by hopes that China is going to go back into stimulating their economy. Well, I don't think China has any choice. I think eventually they're going to have to stimulate their economy because their economy's sliding down into the pooper. But you know what they're doing at this point? It's called pushing on a string. Basically, they got so many zombie companies and so many zombie banks. And if you don't know what a zombie bank is, it's a bank that's not profitable or a company that's not profitable. And it's like a money pit. Do y'all remember that movie, The Money Pit? They did back years ago with Tom Hanks. He went out and he bought this house, you know, out in the country. It looked like a good fixer-upper. But once he got working on it, he found out that it is just sucking up his money like crazy and everything was breaking on the house. And it would have been cheaper for him to start from scratch and build a brand new house from scratch in the end, you know. And this is what the Chinese economy is like. It's like a money pit. They got all these zombie companies that are not profitable, and they just suck up huge, enormous amounts of money, and they don't make money off the products that they're selling. And they're supporting these companies and these banks who are doing similar. And so they just have to keep stimulating, and that's why they're pushing on a string. The money that they're pushing in is just basically increasing the debt, and it's just basically holding their economy together is all it's doing. But they're planning on doing more. They're going to have to do more. If they don't, the whole thing's going to start to fall to pieces, you know. And I don't think much of the Chinese Belt and Road Initiative. I think it's just another big infrastructure program to try to stimulate their economy. That's what I think. It's all smoke and mirrors. It's all a dog and pony show. Anyway, let's move on to bonds and rates here. The bond market is falling today. Investors are frightened. They're frightened of the whole general scene in the whole general world economy, and they see bonds as being the ultimate safe haven asset, better than gold. They don't really, cryptocurrencies aren't really quite there yet as a safe haven asset. They're more of a speculative investment. They want something that's safe, a safe place to put their money. Little do they know, the U.S. Treasuries, the United States is broke, basically, at this point. They got like $22 trillion in debt, not counting the unfunded liabilities, which puts them way over $100 trillion if you count the unfunded liabilities on a mark-to-market basis. They're way over $100 trillion in debt. They can never get out of this hole. Yet this is what you're investing in with U.S. Treasuries. But here's the thing. They'll never go broke because they have the ability to print endless amounts of money. But what's your Treasury going to be worth? If they devalue the dollar down to the dollar's worth nothing, your Treasury's worth nothing. 0 times 0 is still 0. So let's move on and take a look now at the U.S. dollar index itself. The big king. The king. She's dropped back a little bit from yesterday. She was up to like 97.35, and today she's 97.05. She's fell down a little bit, and this is part of the reason why you see this little surge in the price of gold and silver again, you know. But this is good. The dollar should go down. The dollar should go down in flames because it's been misused, mismanaged, overprinted. The only reason the dollar keeps such a nice high on the U.S. dollar index is because it's being weighed against a basket of other sick, dead currencies, you know? And it's the best one. It's the most lively one of the bunch, you know? The whole thing. Anyway, I could go on and on about it. But listen, thank you guys for listening to the Market Report. You guys have a really nice afternoon. And I appreciate my viewers out there. Thank you very much. Bye-bye, and we'll catch you guys in the next show.